Good morning, man. What is going on? Alright, got a few minutes till the open. For those that was there this morning, we spoke about how we favor kind of shorts at this point. So we'll see if 930 can't run out some buy side first. What's NQ up to? NQ already ran out those highs. So I'd like to see if 930 doesn't want to produce a Judas swing to clear the buy side. We'll then look for the reversal to target some of these lows left behind. A lot of higher lows. Higher low, higher low, higher low, higher low. All right. Nah, never that. Just in the process of moving. So we were primarily in the Discord during that whole time, but the free YouTube streams will come back. I'm gonna grab my drink before the open. Okay, we back. All right, so as we said, I'd like to see buy side cleared. I'm gonna favor shorts this morning, just because we've been moving up so early, or so aggressively. We're at all-time highs. We've cleared all-time highs a few times now. We have lows left behind, very large opening range gap. I'd like to see at least the 830 be retested. So we'll look for the opening to run into buy side first. And then from there, probably break lower is what we can kind of expect. Buy side. I am on early facts. But hello. Cool. So yeah, I'd almost like to see this be a turtle soup. So if we're gonna open up 930, go up first, we'd want that to be a Judas swing, run into the buy side. Reject from there, fall lower. 5-minute fair value gap here will be kind of the true flip point for us. So if we can get back below that, getting back below kind of that weekly level as well, that'd be good. Let's see what we get. So we use the original buy side pool here. We're looking at that one. I wanted to see this wick high, but instead we actually just tapped the original buy side perfectly. Bodies hold the volume imbalance as well. So if we're going to fall underneath the 5 minute, we would look for now lows, lows, and lows. And then a full closure pretty much of the CPI gap. Right, we're at 830 levels. We can look for that. Potential first presented. We'll see if that gets held here. We'd want to see closure below the 5 minute to trust in the confirmation that we could start going lower. This run lower could simply be to pick up short-term lows if we end up holding the actual inefficiency. This level here is also a weekly high. Okay, so it's going to be a key area. That's why I just have both of these up. Let's say that we close below the 5 minute, left the 1 minute here open. We could actually try to use that if our expectation is we should catch shorts into the 830. So we fall through the 5 minute. Has the 5 minute close. Ideally, you like to wait for a 5 minute to confirm that. If use a corresponding time frame. So we'll wait 1 more minute and see if the 5 minute wants to actually truly stay below that 5 minute fair value gap here. Maybe even leaving a fair value gap as well. Yeah, there's SMTs at the high. This high here at 930 cleared the high in NQ. We could actually have both up. So I have both charts up. All right, so we create this high. This high at 930 runs that high. This high does not. So if we end up leaving a fair value gap here, this may be all that price needs to use to run lower. In NQ, there's no type of inefficiency or anything yet. We might just run straight for 930. So we're going to leave the 5 minute fair value gap aligned with the actual 5 minute here. Or excuse me, a 1 minute. I want to see if that ends up holding now. We do have our first presented as well. But in this bearish leg, if we want to see 830, I'm watching the 5 minute, seeing if price can come into that, if it offers resistance as an inversion level. NQ, on the other hand, still just falling. So a little bit heavier. Right, as we said, SMT at the high, so we expect the downward momentum. Two-minute inefficiency as well here. So we have the 5 minute inversion, we have the 1 minute bearish, we have the 2 minute bearish. This may be what price is going to try to hold if it comes up into that. We can allow for the wick of the first presented. If we got back above that, outside of the opening range, we'll come for buy side again. Okay, so I like this 5. Our attention is here. We have the bearish breaker here as well. So let's see, right, the high, the low, the highest high. We'll take the highest high. Closure below the actual low activates these down close candles as our potential bearish breaker. So now we have another premium that should hold price if we're going to come up into it. That's what we're seeing here. All right, so the expectation is we trade up into the breaker, we hold that, we get lower. I like to see these lows. We did clear this low. So the low formed in the CPI fair value gap. I would expect we're going to make one more pass at that. And as I said, I like to see 830. If we can get closure below this low, we should start falling. So for the time being, we're just picking up some of these, right, short-term sell stops. I wonder if we could still actually run into the 5 minutes. So I'd like to see that. We have a short-term high here. If we keep falling, that's fine. I'd want to see if we don't want to give one more run up into the actual fair value gap. Instead, we use the volume imbalance itself. So there's full closure now of the CPI fair value gap. We've completely repriced it. Perfect delivery at its low. If we can get outside that, inverting it, that'd be even more confirmation to look for lows. But as I said, I want to see bearish moves for the time being. All these relative equal lows. Here, here, here. So in reality, just this low would be nice. We have a 1 hour fair value gap that could be used as a magnet for price to draw into. Right, we show that. We've yet to return into this fair value gap. So we have a 1 hour here and a 1 hour here. We use this 1 hour as support. We leave this one open. So I'm thinking, right, if we can run out this low, close below that low, we should be able to get into this lower 1 hour that has not been traded into. Closure below the low, we would then expect that to be an area of resistance. So if we're going to close below this low, that sent us right to clear out some short-term highs and back into the original buy side. That same level now will be used as resistance as price falls short. So we want to see if we can clear this low. That becomes really our sell side objective. 1 hour here would be nice. True objective really is just the low itself. If we fall through that low, then we'll see what price wants to do from there. Beautiful. So that is midpoint now, opening range, right? I'm out there. Shorting from the breaker. We could keep going. If we do, we'll just kind of look for a new entry. If we fall through the hourly, right, we can continue to reach for potentially some of these lower levels here. Midnight becomes important, so let's pull that back up. I like midnight. And then you have previous days, what's this? Previous days high as well. So there'll be two key areas if we're going to keep falling. Closure below the low. So as we said, if we're going to close below this low, that to me is a break in structure rather than a liquidity sweep, bearish break. We got into the 1 hour, that's good. We'll see if we leave an inefficiency. Say we leave an inefficiency here. I almost would expect that to be used as resistance, send price lower again. Right, we have these two areas here. This becomes midnight. And this level here is our previous day high. Both of those are going to be key areas if price continues to fall. That needs to be centered, please. Real quick, we'll show the entry so far. So as you trade up into the wick, as we said, we want to see midpoint of the opening range we traded into. We create the bearish breaker underneath the 5 minute. We leave the volume imbalance and the 5 minute or the 1 minute fair value gap. So we're entering as soon as we trade up into the bearish breaker paired with the volume imbalance. And then we're exiting as we trade into midpoint. Swing high to swing low. That's pretty much what we're used to here with our entries. At this point, we'll see now if we want to invert and keep running, or yeah, we'll just play it by ear. 1 for 1 this morning. I'm fine taking another entry if it presents itself. Nah, not on YouTube anymore, Max. Sorry, brother. So YouTube's primarily just for the tape reads, and then the entries will be shown afterwards. Now that I have the Discord group, the entries are primarily for Discord. But so in there, they'll get everything. Live entries, exits, stop management. But for YouTube, it's just tape read. Pointing out what I expect will happen. If you guys are familiar with me, you'll kind of understand when I'm hinting towards certain entries, but as far as showing the entries themselves, we don't really do that much anymore. So we've purged this sell side liquidity. I'm wanting to see if this if we invert this now, correct? Because this was the bearish fair value gap that gets created as we're breaking through and closing below a low. If this gets inverted, that can be a potential long setup now. Because we've already delivered to midpoint of the opening range. If we're going to want to kind of stay range bound or not actually create a full bearish delivery, this inversion, well, this will be inverted and then use as support. So in the short term, I'm looking at the original liquidity to see if that's going to be purge and revert. What that means is as we run this liquidity out, as soon as we close back above it, if price can hold that with candle bodies and then invert the fair value gap, we'll trust that. We also understand, however, if we are truly in a bearish leg and we want like midnight and previous day high, we should hold from here as well. It's a pretty key area. That's why I'm just waiting to see what takes place. NQ in itself, pretty much in the same spot. Okay, so we traded lower. We'll take a quick look at NQ on the larger chart. Let's go here. Cleared the highs, cleared the lows. We actually hold that low a little bit nicer. No fair value gap, however, in NQ at all. So instead, we're just going to have to use liquidity levels and reclaimed fair value gaps like this. All right, we reclaim that, we get above. Down close candle now, should hold price. Let's go back to ES. Still waiting to see if we can invert, right? If we're going to invert, we're also going to be able to get back outside this 1 hour. So we have two 1 hours pretty much stacked on top of each other. What we want to see now is if we can hold the midpoint, leave and get above the actual fair value gap here, that will be kind of the trigger to look for a long. We do have a lot of inefficiencies right here, even here. But I would want to see price try to make its way back up to here. So even that in itself could present an opportunity, right? You only need 5 handles for an ends model. Closure above. And we should start running, right? So we're using that old liquidity level. That's the purge and revert we speak of. Notice that the wicks are holding, but the bodies are actually respecting this 1 hour. So that's important to note. Bodies telling the story. After we trade into the low of the 1 hour, we get above its midpoint with this candle. Next few candles don't want to break that midpoint. Instead, we wick into the low perfectly, but hold the midpoint, and now we have a volume imbalance as we displace above the inefficiency. So for me, let's say we came back into the 1 hour, into this 1 minute. I kind of would like to see that hold and try to make a run up into the 5, and then from there break lower. We do have another 1 minute inefficiency here, okay? So as we said, if we're giving a deeper retracement, we may want to hold that one instead, but I'd like to see that be broken. So I'd actually look for this to get invalidated, trade above, turn into an inversion that could then hold price as well, and see if price doesn't want to hold from the 1 hour here. Higher time frame, it is a 5 minute, so the 5 minute wicks the low. We'll see if now the 5 minute inefficiency creates another run, or if the original liquidity here just wants to hold price. We immediately reclaim the bearish fair value gap. So we speak about the 1 candle's chance. As we close above this, we would want to see another candle respect it. Instead, we immediately close back below, so that almost negates this previous candle's action. And now to me, sets up the stage for a potential now run lower again as well here for this low. There's midpoint. We'll see if we want to get midnight. Right, keep that heaviness. simply running a short-term low there. We've now hit midpoint of this 1 hour. So this was the untapped inefficiency, right? This one was already used. This one has not been used. So we can see an aggressive reaction off of this one. This is our first time tapping that midpoint. You notice that here we left that short-term low just above it. So we're able to pick up sell side and hit the 1 hour. Now we want to watch pretty much and see, does this 1 hour offer resistance or not? Because if we're going to stay bearish, this 1 hour here will try to hold price and send it lower. So we have competing 1 hours pretty much. If we can hold from here and reclaim this 1 hour again, kind of like this candle, get back above it, that would be added confirmation to trust longs. But in the short term, right, we're kind of stuck here 50-50. Original liquidity. That's going to be a key area. Yeah, so just competing here. Seeing if the 1 hour or the 1 hour here wants to give way. There's a very small 1 minute fair value gap, if you could see, that's aligned with this 1 hour fair. So very minuscule, but as price taps that, I would be interested to see what it's going to do, because that's midpoint of the 1 hour, and it's also the original liquidity level. $5-minute has now closed below. Same idea though, like we would need to use the corresponding time frame. So if an hourly candle closes below this hourly, then we could expect this to act as resistance. But we still have 10 minutes, right? And this candle here could completely wick back up, and that would be more bullish. So in the short term, we could follow it with the 1 minute candlesticks. But we really need to wait for the 1 hour candlestick itself to close to truly say this will become an inversion or not. Right, same with this. We could easily be just spending time in here and then accelerate back above, having the 1 hour close above both of these areas. That's that little inefficiency we spoke of. So from here, I'm interested to see old liquidity paired with midpoint of higher time frame inefficiency. If we can get above that, we should be able to run for this high at least. And then from there, maybe try to get up to the 5. I still want to see the 5 up here. We did close above. However, we're hitting the high of the 1 hour now. So if we're going to say that this 1 hour should hold us bullish, what we'd want to see is pretty much now this midpoint and the old liquidity offer us support. Same with this down close candle. If we got below even the midpoint of that, I think we could create another bearish leg, and all of these runs higher are just to give slight retracements. So now I'm watching pretty much a mean threshold here. As we said, when we have two higher time frame inefficiencies like this, we can expect price to kind of be stuck between them and bounce back and forth. That's what we're seeing here. We were able to hold midpoint, right? So this wick lower, bodies tell the story, however. Body holds midpoint beautifully. Where's my drink? Where's my drink? Holding again. So far, we're seeing what we would want to see for bullishness, right? Bodies are respecting midpoint. However, we're getting stuck here at the high. So if we can get outside of the high, we should be able to then use the 1 hour once again as support. Even though it's nice that we're using and respecting this level here, the fact that we're still within the 1 hour can mean that we could easily fall, just like we see here, and attack this low again. Right, so we're not really out of the woods until we can get above the 1 hour. All of this is still inside of the original bearish fair value gap that was created as we clear the low the first time. So we're getting choppy, but we understand the reference points. We can take a quick peek at NQ. Pretty much the same thing, right? So as we said, we had reclaimed this bullish fair value gap after clearing out sell side liquidity. And now that's that fair value gap that just keeps getting referenced. If we fall through that, we should attack a low again. Kind of same in ES I'm looking at. We've actually closed underneath the 1 hour. But because we have this one, we can't really say for sure yet. We could still run out the slow. And then Q. Right there, we don't have any real ones that count for me. I like to see at least a handle. So if we're going to look, we do have one here. And aside from that, I don't even see another one. I see one here. But I mean, that's like one tick. Right, so that still could be useful, but as far as first presented, I wouldn't classify it necessarily as such. Obviously, we're seeing price try to use it now. But yeah, for me, I don't really see any true fair value gap of substance in NQ quite yet. Pretty ugly, to be honest, in both so far. We'll see if we can reclaim this. In my mind, as long as we're below the 1 hour, it's going to try to take out this low. We have a 1 minute fair value gap here now, so I'm watching that in the short term. Just wanting to see what price does there. How does it respect it? Closure above, nice. We'll see if we can't hold that. If we're going to expect bullishness, we want to see this volume balance be left open. So now we'll be getting above the bearish fair value gap with a bullish volume imbalance. So we're placing the premium with a discount. If this closes in, however, we'll just expect that choppiness to continue, or we'll finally make a pass for the low. We're at 1 hour midpoint holding. As we said, 5 minute holds that as well on the hourly. Look at the respect of the 5 minute body. So we've opened with the 5 minute volume imbalance as well. We'll see if we want to make one more pass. 1 hour, we have about 3 minutes. So whenever this 1 hour candlestick closes, it'll give us a little bit more confirmation. Because if we're going to hold this 1 hour fair value gap here, then we'll still have a chance. If we close below it, I'd actually would expect that to be resistance. And like right from there, we close in the volume imbalance. We run bearish, we hold midpoint. So yeah, so far I think we're going to make one more pass at this low. We need to see this pretty much aggressively get above, right? Because we noticed that once we close above it the first time, we negate that, we get back below it. Price since then does not make an attempt. So it's showing that it's unwilling to get back above this 1 hour. And because of that, that's why we would expect the bearishness to reach for sell side. Especially if we're going to close underneath here at 10 o'clock. That's hideous. There's midpoint. Okay, both trying to fall. Closure below 1 hour's midpoint. So now we would expect that to be resistance. We close below the low as well. So now I'd look for midnight, previous day high. Right, next areas of interest. 1 hour is going to close. So we'll see what the 1 hour does here. Looks like it's going to want to close below this. We'll fair value gap, but it might get a quick rejection here in this next minute. Waiting for midnight touch. 1 hour has now closed below both. Let's see what this 1 hour does. It's going to close right. So it actually did. So the 1 hour closes below both of these. We opened with a bullish volume imbalance, however, so that's going to be pretty interesting. If this can negate this candle, honestly, we may actually start running higher, but closing below, to me, would mean that we're probably going to visit both of these levels, midnight and previous day's high. Second closure below, to me, that's a little bit more confirmation. So now I'd look for at least midnight, previous day high. Yeah, PDH is previous day's high. So if we look at an hourly chart, we look at yesterday's high. That's here. So we're looking at the previous day high. But for some reason, not, oh wait, 15-minute. You'll see it a little bit better. Right here. Right, so the high of the previous day, that's going to be a key area for price to reference. So my expectation would be if we're going to try to keep running bearish, those two levels would make sense. Holding from this 1 hour here. Notice how the bodies are holding that 1 hour aggressively. We keep immediately rebalancing though, so one of two things. If we're going to expect bearishness, we should see aggressive bearish moves to clear out this low. But if we keep testing this and actually get above that, this may become a swing low, and we may want to revisit the higher inefficiencies. So at this point, I'm watching midpoint now. Midpoint will be key. We've hit it a few times. Does not want to let the bodies get above that. Right, so for the time being, we're still holding this, and we can see another run lower. Wouldn't mind a retracement higher at this point, to be honest. Right, we've picked up a lot of sell side. If we're going to keep respecting this, though, we'll expect it to fall eventually. Very random reactions here at this 1 hour. I mean, look at that. Again, holding, yeah, does not want to. So we should see price start breaking if this is going to do this. We break above this, as we said, at that point, I'd look for bullishness, because here, seeing this type of delivery, this is very bearish. Respecting the premiums, bodies telling the story, right? Can't wick into midpoint. So we displace above that. That'll be kind of the flip point, especially with NQ running the short-term low. But I think we get one more run lower. There's midnight. Closure below. Nice. So next we look for previous day high. And then for me, that would kind of be like any lower than this, then we're going to start looking for just more bearish moves. So from here, I'd want to see if we're going to create a rejection. Right, previous day high, after creating a bearish move. This is where we could see price reject. We bring up anatomy of opening range as well. That's going to be the lower quadrant. Right, not random. We wick into that beautifully. So from here, I'd actually see if we don't want to reverse now. We need to regain midnight. So if we can reclaim midnight, reclaim the hourly, we should be able to start running. If not, let's say that we hold the bearish fair value gap here, close below this wick, then my idea, or at least my bias, would flip to where I'd look for now continued bearishness. But for the time being, I'd want to see if we invert this. That should be bullish, and then try to get back up into either highs up here or some of these 1 hour inefficiencies. So at this point, especially because we already wicked and respected midpoint, we get above that, we should just keep running. And we look for the 1 hour. I still like this, if I'm being honest. This is the most recent inefficiency, I guess, besides the 5. So we have a 5 minute here we can watch. I would expect that we get above that. We could hold potentially. We often say after delivering into higher time frame objectives, we can retrace into open inefficiencies and hold. So that'll be our first area of interest. I would expect that we get above that. That turns into an inversion. From there, we would look for, right, this is really the only other inefficiency on a 5 minute. So we could look for at least that. On a 1 minute, that's this 1 minute here. Right, so pretty much the fair value gap that held us originally to create this down movement. But we're going to get probably, we'll see what we get here. So we deliver into the high of that 5 minute perfectly, and then we get an immediate rejection once again, kind of like we saw up here. So if that's the case and we want to keep running bearish, we'll overtake this volume imbalance and fair value gap. We'll close back below midnight, and we'll make more passes for previous day high. And at this point, keep trading lower. Keep attacking the lows. So at this point, pretty much just watching the volume imbalance. Right, as we trade into the 1 hour, we create that discount. So now we'll have competing discounts versus PD arrays, or discount versus premium. 5 minute premium holding. As we say, we like to wait for the 5 minute chart to close to confirm that. So we still have 2 minutes. So we'll have to wait 2 minutes to see, but for the time being, we're respecting that. Closure right on midpoint perfectly. So we'll see if we can respect that level or not, or if it's going to want to hold us, create another down move. Bullish fair value gap here as well. So in this case, a scenario, like if we're expecting the bullishness or we want to see bullishness, we can wick into fair value gaps, but you would want to see bodies respect the volume imbalances themselves. So that's one thing I'm looking at. Oh, I don't want text, bro. Trying to see what do the bodies do inside the volume imbalance. Not quite yet. I think we're going bullish. At least I would expect that short-term run into like at least this fair value gap. But it'll depend on the 5 minute. If the 5 minute holds this bearish fair value gap here, then yes, I think we'll probably make one more pass. If 5 minute inverts this 5 minute here, then I think we'll come into the 5 minute, or excuse me, the 1 hour, and potentially make an attempt for some of these untapped inefficiencies higher up. So at this point, I'm watching midpoint again. That becomes key area, right? It's held once, twice, multiple times. It first holds as support. So when we get below that, it should hold as resistance. It does. Now that we're above it again, I'm seeing what happens here. Because it should have held as support. It did, but this candle closes below. So is it going to want to use it as resistance? 5 minute candlestick will close. This will give us more confirmation, as we said. Let's bring that 5 minute back up real quick. Ideally, you'd want to see the 5 minute close above this fair value gap if we're going to look for price to start running higher. If it closes below, that's more bearish. So we'll see. 1 minute, 8 seconds. Let's see. I'd almost expect that if this 5 minute did close below, the next 5 minute candlestick will be what runs out these lows here. So we do close below. 5 minute respects that. Notice the body doesn't even get near that actually. So to me, yeah, so far that's bearish. Unless we can get above that aggressively, displace above that, and use it as support, this area will more than likely try to hold price. Send it lower. I'd like to see it get above the 5 minute, close above the 5 minute, and use the 5 minute as an area of support. But notice right there, once again, perfect delivery into its high, hard rejection. So showing it does not really want to spend much time in that premium. We'll see if we can get above that. If we can, we should be all right for a short run, but as long as we're holding there, I expect a quick fall. Yeah, right. Every time that we're touching that, immediate rejection. Not wanting to spend any time there. Closure right on midpoint once again, at very random levels. Pushing through the high, let's see the rejection. All right, so this time we actually get above the 5 minute, but it's all about the bodies. It only matters if the body does that. Cool, there's the 1 hour. So as we said, I'd want to see the 5 minute close above, use it as support. Ideally, we close above the 1 hour as well. And I don't want to see this high. This becomes like my short-term high that we target as buy side. Cool. So now we'd want to see if we can't actually push through. Ooh, let's bring that back. Closure above the 1 hour, I like that. Midnight holds, previous day high holds. And here is a balanced price range, okay? Up, down, up, down, up, down, up, down. So as we trade into the 1 hour, into the BPR, we could hold here and break lower again if we're not going to want to run any type of liquidity. I'd like to at least get some type of short-term high. So here, where I see the 1 hour as a midpoint, we can get this high. We have relative equal highs right at the high of the 1 hour. I like that as well as a draw. Should be pretty easy to reach into. We'd want to see the 1 hour offer support as we close above it to try to reach for buy side and buy side. And then really for me, this is like the final target. The untapped, the open inefficiency, where we went short early on. So we'll see if we can get up there. Move this, a lot going on. So that becomes buy side. We don't even really need the inefficiency. We'll just get the buy side pulls. 1 minute fair value gap. So if we do dip into this, I don't want to see that hold. NQ cleared highs already, so potential SMT. I wanted to see this high as well. That's the same high that NQ just ran. So we'll see if NQ can sustain the bullishness, which would allow ES to at least run one of these highs out. We often speak about how this type of delivery, right, the stair stepper, higher lows, if we just keep doing this, this can very easily be ran through low resistance. So if we're going to do something like this, I'd want to see it make an attempt to run out the buy side quickly. Right, so like if we're going to tap this, create the low, create the higher low. If we're going to trade into this and create a higher low and hold that and close above this high, I'd want to see that next run attack the buy side. Because if not, and we just keep doing this, right, as we say, very easy to fall through that and maintain the bearishness. But I'd like to see buy side, and then that'll be final target all the way up there. If somehow we can get the bullish momentum to continue, let ES resume running. Or NQ anyways, get NQ to run, let ES resume bullish delivery. Waiting for buy. This is the original sell side. This could be an area of rejection, original liquidity. So I'm wanting to see us get above that because we hold it the first time. So I'm not trying to see that be respected multiple times. Right? That's the old low, the original 1 hour low. Closure above that will allow us to now keep pushing. We're gonna have a bullish breaker here aligned with it now as well. So if we can run out the buy side, that'd be nice. If we can close above that buy side, that'd be even better. And then we can allow that to just keep on pushing. Falling just short. So at this point like this, I would not want to see this candle body hold below this level. The old liquidity. I want to at least close above it. We do. So now we can use it as support. I'd want to see this next candle pretty much use this area as support and not break this candle's low. The most recent up close candle here. If we come all the way back down, we'll probably have to revisit this inefficiency. Falling just short of the buy side, unfortunately. But right, that's also the 1 hour's midpoint. So we could see why we're going to reject from there if that's the case. I still think we can get this now, especially with the relative equal highs. So we'll still expect that, at least one more run into this short-term high here. Five-minute, yeah. So we might just be creating a 5-minute fair value gap. 2 minutes down there, we didn't get into the 2 minute. So if it wants to retest that, that's fine. We're not too worried about that. Closure below like the 1 minute, then we'll start looking for potentially lower moves again. But I'd like to see at least that buy side real quick. That's fine, retesting the 1 hour there. As we said, the more that we create this stair stepper, the easier it is going to be to run out the lows. So we'll see if we can create another higher low here or not. Close below the 1 hour's midpoint. Close below the bullish fair value gap. So now we're going to have an inversion. We would need to reclaim that. Right, we're starting to put in premium, so we'd want to see this very next candle almost negate this candle's action by closing above the 1 hour and ideally closing above this 1 minute. If we hold that, break lower again, this may start setting into motion. The runs on some lows here. As you said, we had S&T at the highs. The high in ES we wanted to see get cleared had already been cleared in NQ. So if we end up breaking lower, that will, S&T will be right kind of the contributing factor. I, however, would like to see us try to reclaim that. So get above the 1 hour once again. If we do, that'll be good. We're holding midpoint. Let's see, 5 minute, right, all wick. So far, I still favor higher prices. We're just watching the 1 minute here, seeing what takes place. Thanks, Jason. Appreciate it, man. Yeah, I've been doing this a long time, man. 7+ years of staring at these charts. Right, so we hold that beautifully. At this point, I'd want to see midpoint. If the expectation is we start running bullish and we're going to ignore the premium, we'd want to see the premium be disrespected while holding midpoint of the 1 hour, respecting that as a discount. This would almost be like last line of defense. We could get below that, but like if we get below, close below the volume imbalance here in the 1 hour, I'd look for lows again. So if our expectation is bullish and we want to see higher prices, we need to invert the bearish fair value gap here. We need to reclaim the bullish fair value gap here. We need to hold the 1 hour high as an area of support and make another pass at the buy side. Because now we have relative equal highs, and that becomes the next target for us. Creating buy side just below buy side relative equal highs. So we get outside, but right, we immediately come back in. So we would want to see this hold. If we're going to do this, this would need to be an immediate rebalance, and this candle would need to close bullish and be a pretty much just a wick lower. Right, we would not want to see the body close back inside of this 1 hour if we're going to aim for this buy side. I'd want to see this pretty much be the area of support. Now that we inverted the bearish fair value gap, use that immediately. So wick into this, hold this with the body, acceleration into buy side and buy side. And Q did the same, and Q actually cleared a low. Okay, so this, I would want to see the next candle clear the buy side, if I'm being honest. Because now we have S&T at the lows, we've respected this. We don't want to see price continue to reference an area like this. And we've actually opened with a bearish volume imbalance. So seeing that, we probably will retest that. So just sloppy delivery. Best case scenario is that this closes bullish, so it negates the bearish volume imbalance, and it doesn't even make an attempt to come back into the 1 hour. That's what I'd want to see if we're going to run bullish. What high is this? That's this high. Why can I not get that high? What in the world? Hold up real quick. Things all goofy. One sec. NQ. There we go. Okay. We were missing a candle there. So, I mean, we got kind of what we want. That volume imbalance stays open, so that's not good. That's going to be a volume imbalance. It's not the typical one you're used to seeing, right? It's a hidden one, we would say, because a normal one looks like this. It's easy to spot, but that in itself is one. Open here, close here. That can be where price holds now. So we need to see price get above that. As we said, we weren't able to come back down into the 1 hour, so I am a fan of that. But now we need to see this candle's high be traded above, closed above, make a pass at the highs. If we can do that, most recent down close candle should offer us some support. But if we end up holding this and the body does not get above the volume imbalance here, I think we'll just continue to reference this 1 hour and either consolidate within here, right, get sloppy, or it's just going to fall through this. Yeah, not a fan. So don't like that. But this becomes the barrier that we need to get above. So I'm watching that and I'm saying if we don't get above that, we're going to run lower. And Q is kind of in the same spot. I wish that the chart would be better. Oh well, it doesn't matter. 5, 15. 15 is still waiting to close. So this is the first candle to close back above the 15. So all of this nonsense could just be right time distortion consolidation. Waiting for the 15 to respect that. 15 closes, then we can get the release. As far as a 1 hour, same thing, right? 1 hour closes below, but we open with the bullish volume imbalance. We close back above that, we should be able to run. Don't forget, we also have this though. So that's another reason that we're kind of getting stuck and trapped here, is that we have the original 1 hour acting as a premium now, an inversion level. All right, so we have both of these. We have, as once again, competing PD arrays. That's why we expect the choppiness. That's why we expect the consolidation. At this point, though, I would favor to get these highs. So I would want this to be the protected low in the short term. And I would want to see these highs be cleared before we clear this low. You need to get above the volume balance. Yep, right, if we're going to run bullish, we want to see ES catch up. 6 sister, NQ already cleared those highs as we said, so we want to see ES make an attempt. That right there, not good sign. If that stays open, watch for a run into lows. We need to close this in if we want to see bullishness. If that stays open as a bearish volume imbalance, then yeah, we'll probably come for some lows here. It's all about the candle body. See what the candle body does. Closure below, right, we'll look for the run on the lows, as we said. Leaving that open creates the bearish movement. And we close below. So yeah, I'll look for previous day's low again. Right, that's, or previous day's high, excuse me. We're hitting midnight right now. So we'll see if midnight can offer some quick support. But if not, we'd look for previous day's high here. Midnight would pretty much need to hold us immediately and get us all the way back above this 1 hour, because this 1 hour is going to act as a pretty strong area of resistance with our mitigation block in here now and with the inversion volume imbalance. And we actually closed below this. So we pretty much negated all of the discounts, which to me means that it's going to try to run for this low. Unless this candle here could pretty much get back above all of that. No problem. Hopefully it helps. Yeah? Help people read price and give some expectations. So yeah, if we held that, especially back to back, that's going to be the inversion. Let's see what this 1 minute does. If it can reclaim the bullish, it may have a chance. But that 1 hour, So it reclaims midpoint. That to me isn't enough. I still would expect another run lower unless we can pass through this. But it would need to be a displacement candle. Because if not, we're just going to end up using this as resistance. So we'll trade up into this. We'll hold there and we'll break and attack this low. And then from there, we'll either use that or we could return. And Q's trying to get bullish again. Yeah, we'll see if we invert that, that'd be a nice area to add another one. Midnight held. Look at the bodies there. So that's what I'm watching it. If midnight can keep holding and we invert that, we should be good, but we would need to display. Yeah, we're holding that premium instead. Just seems like we want to go bearish. We'll see if we don't want to get a quick displacement up. Displacement through the most recent 1 minute fair value gap. But this becomes pretty much the flip point, right? That'll hold us short. If we get above that, it should hold us long. It's trying to hold. We need to displace though, as we say, if we're going to want to get the buy side we want. So there's the first time really trading into the 1 hour. Here we have equal highs. Now that we've hit that for the first time, clearing the equal highs, this is where we'll see either the breakdown in structure or a potential inversion play. So now our attention keys right back up on that. As we said, if we are bearish after clearing the short-term highs and hitting the 1 hour, we'll see price then fall below midnight, close below midnight, and run for the previous day high in the short-term low. Yeah, it's aggressive. Yeah, so if seeing like this, I would expect closure below midnight and then a run for that low. We didn't close below midnight and we wicked that low, so we're still waiting. This could be a wick rejection. Candle bodies tell the story. NQ trying to get higher, we'll see. Yeah, we're just getting ugly here. Okay, we're still holding midnight, so. But as we said, with this run on the short-term highs, my expectation would be we might try for the slow, unless we can get a quick displacement above. But I think we would come for the slow one last time. Equal lows, perfectly equal lows there. Pick up the low. Let's see if we close below it. Closure below with the volume imbalance. Okay. So that to me will be bearish, especially if we leave that open. And then we'll look for the low of the actual opening range itself. So 1 hour holds perfectly. Sends us into sell side. Same here in NQ. We pick up the sell side. We don't leave any fair value gap. Okay, so we might end up reversing here. If we could have left a fair value gap there, that'd be nice. But now I'm just going to watch and see if we get an immediate rejection from that point. If we end up purging that and getting back above it immediately without leaving any inefficiency, we could see now an aggressive rip higher from here at this point. Especially because you have 5 minute. So the 5 minutes all wick. 15 minute, same. So still not convinced. Let's see if we can run. We purge and revert the original liquidity. So kind of like the old method here, we'll watch and see, does that original liquidity offer us support with the body? As we clear that level and we get immediately back above that level, if price does want to make some bullish runs, it's going to use the old liquidity as an area of support. So we're watching that, right? Price dips into it, it holds. If we see the candle body respect that, close above, I would look at this wick. This wick becomes a gap. Wicks that get created and traded through become gaps in price. So this is another area for us to look at as well, because it's aligned with midnight. So if we can get above both of these, then that should be bullish. Look for bullish continuation. If we hold that, then we may just keep folding. But really, since we created the original short, it's just been higher highs, higher highs, higher high, higher high, all the way down. So far, I mean, look at the respect there. Wick into midnight, body holds wick low perfectly. As we said, we need to get above that if bullishness is going to resume. A lot of highs. Look a little too, we've only cleared sell side. A little too clean of the highs, but let's see what this candle does. Once again, retesting wick. We'll see if we can get above at least midpoint. Midpoint will offer rejection. Yep, just like that. So it looks like it's going to reject. It does. Closure on midpoint. Once again, beautiful. Closure on the low. Closure on midpoint. Bearish volume imbalance hitting midpoint. This really will be what ends up rejecting, because we've hit the high now and we've hit the midpoint. So in theory, if we're going to want to break lower, we shouldn't retest like highs of this with the candle bodies. So if we can get a candle body that closes above, we should get a short-term bullish release. I would guess at least until like this high. Might reject there because that's still the original 1 minute and we never got into its midpoint. So this is where we could see like price trade up into that, clear the high, hit the midpoint, and then fall. But in here, yeah, still holding it. So unless we can get above, we'll expect this area to hold us. We will expect it. We will expect it. What up, Darkly? What's up, my dude? We got above midpoint, but look what happened again. Volume imbalance, right? So it does not want to stay above that. In fact, that's even worse than just closing on the midpoint, because when we close above like that and open back with the volume imbalance, that's kind of price showing, telling us that it does not actually want to stay bullish and it wants to hold the wick itself. So if that stays open and we close back underneath this wick, I'd look for just another run on lows, right? And we're going to keep delivering lower. Yeah, not the easiest day, that's for sure. A little choppy. Yep, so closure below that, we'll look for another low. Which it looks like we're going to get, especially if we close below the liquidity. We do. This next candle would need to get back above. If not, it's going to use this level as resistance as it trades up into it. So we'll look for that. Might something potentially like this. It might create the wick and then keep delivering lower. We just haven't cleared any buy side at all. But, you know, you don't want to jump on that. As we said, we favored the shorts heading into it. From here, we wanted to see longs, but if we just stay heavy, we can just keep selling off. Yeah, that wick holds beautifully. Okay. Another leg lower. At this point, we'll look for opening range gap below. This becomes a pretty important fair value gap right here. Notice how the midpoint of that is perfectly this old low. Right, that's not random. So we watch that now. Key area once again. Gold longs, nice. I like that. Get that gold. Make your bread on gold. Watching here. See what that does. I just said, once again, if we're going to stay bearish, this should be the area that holds now. We get above that, we'll run back into this 1 hour. Because at this point, highs don't want to be broken, right? So it's just going to hold the most recent premium, which is this. And then it may want to get into, yeah, down there. We'll see. No, that's kind of what we would expect. Let's see what ends up happening there, midpoint. See what the body does. If it doesn't just immediately run, this candle itself might run for the lows, but if it doesn't and closes below, we would expect the next few candles to make an attempt for that. Days like today, it's very, yeah, I mean, if you understand that darkly, right, that's a good day to just kind of relax. Just watch or tape read or something. If you don't have full conviction in the PD arrays holding as you would expect, then there's no need to put extra risk. So we'll see if we want to tap this again, but I wouldn't be surprised if we just fell from here. Right, NQ looking pretty weak as well. Nice. What's the opening range gap low here? Cleared the short-term low again. NQ same. We'll see what happens there. Some type of rejection or not. So far, 1 hour full bearish. Yeah, I like opening range gap below. Or, oh, and I'm a chat up. Shoot. Yeah, pretty bad price action, though. I mean, we could have expected this because, all right, there's a few things, right? For one, CPI itself, if CPI is like this, where it's not one-sided off rip and just runs, it's more than likely just going to be consolidating. Because the characteristic of CPI is that it's very one-sided. So immediately seeing the fact that we didn't even really pump up that much and instead revert back into the range, we're already expecting choppier delivery. Aside from that, right, what else? Well, we already cleared the weekly swing point overnight. So if we're already running into daily swing points like that, we're going to expect choppiness around that level as well. We fell just short of that opening range low. And we close below. So I would almost expect this holds. This becomes like immediate rebalance and we make a pass at this low. Then once the full opening range is kicked or put into place, then maybe we can reject, start running higher from there. Yeah, I was gonna say, yeah, that could be right. If we ended up hitting that, that wouldn't be a bad idea to try to bounce from there. We're already at, what is this? Okay, that's the daily open. So we've delivered into our daily open. We could actually see it bounce from there if it really wanted to. He said, I hate this now. That's fair. I mean, yeah, even for me, right? I would really say the last 6 months. Just a lot more choppy, a little more ugly price delivery. A whole bunch of things go into that though, right? New president, war talks, all-time highs. Yeah, I'll probably chill till about 11. For me, I risk extremely low. Okay, I'm risking 0.25% on my funded. So for one, my trading style, I mean, of course you're obviously not a trade, but I feel like I've spent enough time to where I can almost mitigate that. So I could understand when these conditions are going to come, or at least when they may be more probable. So I'm cutting risk. And aside from that, I don't overtrade. So that's another big thing. Is that if I have a day where I take 2 losses and things just aren't going my way, I'm just going to call it. So I don't give myself the opportunity to go on tilt or to blow the account itself. And usually, right, knock on wood, I'm at the point now to where I'm not taking a bunch of losses over and over and over and over anymore. And I'm pretty precise, right? I know what I'm looking for. So even in choppier markets, I'm able to find precision setups that can produce profits. And it also helps that I'm not aiming for large returns, right? Like I'm not really ever aiming for huge moves. Most of my trades are 5 to 10 handles only. And even in choppy markets like this, 5 handles is very easy to find. So it's just a culmination of all that. Like the experience, the risk management, the aiming for base hits rather than like large windfall victories. That is kind of how you keep yourself around. And easier said than done, of course, right? I only know that now because in previous conditions like this, I would overtrade. Or I would be too aggressive with risk. Or I would hold for too long, right? And I wouldn't get taken out where I would expect. So it's just been a matter of refining, trial and error. Well, it depends on the account size, right, Hollow? So like for my funded futures accounts, they're 50K accounts and I have those copy traded. But in those accounts, I hardly ever do more than 1 contract at a time. So you figure, right, if I take 1 full stop, that's 250. And very ever am I going to have a 5 handle stop. So I would say most stop losses for me are under 3.5 handles. So if that's the case, and I'm risking only 1 contract, right, what's that, 150? per one account. Of course, once you start copying an account, of course it's bigger, but on one account, I always look at it as just one account itself. So if you have very low risk, and as I said, I'm not losing a bunch of times because I don't either allow myself to, or, I mean, it just doesn't really happen anymore. Like if I start going on a losing streak, I'm just going to cut myself off so it doesn't have the opportunity to snowball into more losses. But most of the time, we don't really even go on like losing streaks like that. You still get decent payouts for sure. Figure it this way, 3 accounts, 50K accounts, you make $2,000 on that for the month, right? And you get a withdrawal, $1,200. And that's only on the smallest account sizes, right? You got to remember you're copy trading multiple accounts. The payouts should not be the focus, in my opinion. The focus should be, especially in times like this, just maintaining the account, right? Keeping the account. And then when price gets easier, that's when you start stacking the payouts up and you start really running the accounts up. But for the most part, I mean, especially if you're going to be an everyday trader, like all you want to do is have the consistencies. Okay, so that's probably why then. Yeah, like if you're only using one account, right, you're going to be forced to have to take bigger entries to try to make more. That's why I always preach capital over really trade size. The more capital you have, the less stressful it is, the easier it is to find moves that repeat over and over. An easy market is a market that has clear objectives on a higher time frame and moves to those objectives with classic, right, either buy or sell programs is what I would say. So like I would say the easy market was when we finally left the range. Let's go to a higher time frame. Like when we finally were able to leave this daily range here, this was pretty easy last week or 2 weeks ago. So this whole run up, that's an easy market because we understand we're outside of the range. We have a higher time frame objective to draw for. So in this case, right, most discounts, almost all discounts are going to hold. So it's just a matter of waiting for those discounts to be traded into, finding a lower time frame setup, and then trusting those higher. So like in this move here, right, that's where we make most of our money. So like last week or whatever week this was, we'll say the 23rd through until we really hit that weekly high. That's where most of the profits are made. Then we run into this. This is where you maintain the profits, right? And we're still winning, but it's a lot lower risk. It's a lot quicker in and out. It's not holding for crazy moves. Yeah, when we say easy market, I'm simply just meaning we have an obvious higher time frame draw, and we have obvious 1 minute market structure that gets respected. Or something like this, right? Like the fact that we closed under this 1 hour in an easy market, we would have just held from here and fell straight into this level, which is our original level we're looking for, low of the opening range gap. But because we are choppy, that's why we're seeing these deeper retracements, multiple retracements into, right, original consolidations, breaking, another retracement, breaking, and then finally, only after breaking here do we use that 1 hour. So you would have expected to see a move like this from high to low here originally, but instead we have to give that retracement into the balanced range, and then we finally get the break. So in markets like this, right, it's just a little bit more give and take, which can cause some confusion. Because you could have the idea right, you could have your entry right, but then say you move your stop too quick, it'll come back, tag you out, and then still go where you're expecting. From here, honestly, we should just keep going lower. I almost feel like. We'll see. So we're inside some first presented. We'll see if we want to hold from there. Or if we fall right through that. Outside of the opening range, as we say, we leave this. So that, to me, will become the new flip point. If we're going to stay bearish, we create a bearish fair value gap, displacing outside of the opening range, closing below an old low, high, low, higher, high, broken, bearish breaker. Right, so we have the breaker. We have, this is our, I want to say, what is this level here? Daily? I'm like, what is, I had this for some reason. Oh, okay. That'd be where, don't need that. We were just using the opening range gap instead. So yeah, we'll see if we just keep falling. What's NQ up to now? NQ, same, heavy. Right, all these highs that were left, I wouldn't be surprised to see those cleared later on in the day. Same in ES. Like, let's just hide everything real quick. A lot of highs left behind. But don't want to hop in front of that. I think we come for these relative equal lows right here. Right, too clean. So the low of this. That's pretty much the move that originated all of this higher price delivery. Right there. Yes, sir. Cal, good shit. That's a nice one there. Yep, 1 hour short. That was clean. $23.18. Is that on? Oh, let's see. Let's see, 0.187. 5 minute here, you're saying? Oh wait, this one? This one? This one? Yeah, that's fair. I would have waited for confirmation. So like I would have had this on my chart as the area I want to enter. Especially because price closes below here. So this is where we want to enter at. But as price trades into it, I would use a 1 minute. So right, oh yeah, that gave confirmation actually perfectly. So I would have waited for price to trade up into this short-term high, right? We clear that. We hit the high, the 5 minute. We break structure through a low, closing below. So as soon as we did that, then the 5 minute is okay to be used. So you wait for the confirmation on the 1 minute, break structure, it retraces where it gives you the entry. And then from there, right, we could have trusted that to get short. Yeah, just falling. All right, we'll see if we get these equal lows here. I trade small. I almost disregard the buffer if I'm being honest. Like not disregard it in that it's not important, but I don't change the way I trade to try to get to do buffer. I just trade how I normally would, understanding that I know what I'm doing and I have an edge. And I don't worry about trying to meet the buffer. I just treat it if it would be a normal account that I want to keep for a long time. And that's kind of how I maintain those. Because I found, I've been through it all. And that's the only reason I'm saying stuff like this, is that in the past, well, first of all, in the past, when I would pass funded accounts, I'd forget how to trade because I'd be nervous that it'd be real money that I could withdraw and I would just do dumb things. Eventually I got better at that, but then I would try to do, as you're saying, I would try to get past that buffer quickly so I could withdraw and keep money in there. But it just causes the same unnecessary risk and stress for me personally, to where if I understand, okay, over a long period of time, right, I'm going to have more winners. I'm very precise. The P&L curve will continually, steadily go up. So I would rather just trade how I would, and however long it takes to get past the buffer, right, let that happen organically. Because I'm not really at the point now to where like I need to take payouts consistently. Like early on, of course, right, I think that you naturally lean towards that because you're trying to get payouts to live, right, to do things that you want. But as you already start building up capital, then I'm not reliant on the payouts as much, which means I can kind of just let the accounts rock as they normally would. Treat it as a live account and just be patient and consistent with it. Hey, okay, Sam. Hell yeah. Yeah, we were gone for about a year. Away from the public eye. First presented, we did clear that low, so I'm watching pretty much here now. I wanted to see if we inverted that. If we get above this, we could start running bullish, but for the time being, if we want to stay bearish, we're just going to hold all of these. We'll hold the wick, we'll hold the volume balance, we'll keep breaking lower. Full time, good shit, brother. Hell yeah, congrats. Let's go. Freedom. So at this point, we're just waiting. Right, we did take the short on ES as well. So as we said, this was a key area. We ended up shorting that. So that's the second one. We'll probably leave it there for today. We got stopped at break even, so we had to go back in because I was being a little bit more aggressive with that. So we get short. As soon as we respect that, we get stopped at break even. Once we hold that and close back below, I still trust this, right? So I'm just going in short again. And then we get out as we run into the low of the opening range. So it would have been nice to hold for the lows, but as I said, I don't really need to hold for those large moves anymore. I'd rather just get consistent base hits. So we aim for the opening range gap low, and we get that. Still golfing? Oh, yes, sir. That's how you know about that. I love me some golf. I'm addicted, man. You know, I'm pretty boring. I'm either doing three things: trading, golfing, playing video games. That's about it. Actually, I have started making a little bit more videos now that the Discord is live again. But either way, I count that as trading. Let's see what we have. We have a 5-minute here, so I'm just kind of watching that and seeing if that's going to hold us and send us lower. If we're going to stay heavy. Yeah, I did. I mean, not like an actual 9 to 5, right? But DoorDash, Instacart, Uber. I did what I had to do to make money while I was learning. And I was kind of lucky because I started learning when I was already in college. So like I was on full scholarship to play baseball in college. So at the time being, when I started learning, I didn't really have to worry about expenses at all. I knew, or where to live or where to eat. So I could sink all my time into just learning how to trade. Aside from practice and things like that. But for the most part, right, I didn't need to make trading work right away, which helped. Yeah, we've worked jobs. Worked at UPS. Worked at American Eagle. Blue Beacon Truck Wash, washing semis all day. Wet and dirty. And if I'm being honest, you should probably always have a job. That's one thing that, as I've kind of spent more time in this, right, early on, and we've talked about this before, but early on I relied solely on trading profits to live, because I thought that's what, right, good traders do. All they do is trade, they make all their money trading, which they still do. Right, but I realized that aside from that, if I have other income streams, it's just a lot easier to trade. So not only do you make money trading, you make it easier, which allows yourself to make more. So I think it's always smart to have some type of, right, extra income outside of trading. And honestly, that's why I have my Discord now. Is that I know what I'm doing, I know what to look for, I've made money trading, but if you can create something that produces steady income, it just makes it that much easier. And obviously, right, it's not like it's a scam or anything, because I've shown that we know what we're looking for. We've shown the consistency over time. So if you can help out other people while also making it easier to trade, why wouldn't I do that? A 4-hour relativity equal lows. On ES, you're saying? I could see that. Were you 6260 though? That's crazy. Maybe. I honestly thought CPI would clear. I mean, I guess it did clear the high. But I was thinking we'd get like a huge move out of this range, because in reality, we're still just range bound for the most part. But yeah, if we can close like below these lows, bearish. Don't really like to call tops, but at least in the short term, I'll start looking for moves back like into the daily fair value up here. Yes, it will become greatly better. Oh, wait, what would you say? Currently, you're a break-even trader. You trade the AM Silver Bullet with 2 trades max per day. That's a good little method right there. Yes, as you do it more often, I mean, right? The journaling itself is going to be key. And I've shown my journal through in the past, and that was really what I would say separated me from most people. Was that I would go in every day for years, legitimately every single day at the end of the day, and I'd go in and I would mark up the chart, what took place, how I would enter, why I would enter, why it was respecting what it was respecting, right? Creating that pseudo experience, as I say. And from there, it became really easy, because then you start believing that before it happens, or you start seeing things before they take place. So yeah, I would say at the end of the day, you have to go in and journal every single day. And sometimes you don't want to do it. Like there'd be days where I wasn't in the mood, or I was too tired, or I had an actual bad trading day. Like I got chopped up all day and I didn't even want to come back and look at the chart. But that discipline to come back and do it is what really separates you. Right, no matter how you're feeling, you have to do the work. You got to sit in front of the chart. You got to build that experience. No one could do it for you. And that's really the only reason I could really do what I'm doing now. Right, like we could pretty much call out every 1 minute candlestick, where it should go, what it should respect, what it's reaching for. As we said before, we're very rarely ever surprised now by moves. Like, it just becomes repeatable. It's like a book that you've read before and before. That you realize where it's at, you realize what's going to happen. I mean, I would guide you to, it won't be like one-on-ones, but the Discord is pretty, like every day, right? We're streaming every day. You'll see live entries and exits. You'll get the why, you'll get the walkthrough. So it's not a signal service per se, but I mean, if you want to treat it as such, I'm sure people do, because you're getting live entry signals and whatnot. But it's really for people who is serious about learning. I'll walk you through pretty much candle by candle what we expect, why we should expect it, why we shouldn't expect something, right? When our expectations can change. Winston, why are you taking stupid trades? What do you think it is? Sam, I do treat NQ the same. So volume imbalances, regardless, I look at them the same, whether it be ES or NQ. So like this one here, right? I would use that as an inversion, especially because that's midpoint. So when you're seeing those things like this volume imbalance is midpoint of the opening range, that's not random. It holds multiple times, once, two, three times. So that already is telling you it's going to be key. As soon as you get above that, that becomes area for entry. Inversion, volume imbalance, stop below the most recent low. Low hanging fruit entry would be like midpoint of the inefficiency. Boom. And see, that stuff easy. You can find that stuff all day, every day. And I mean, you see the respect, right? Look at that. Once we hold it, we respect it, we respect it, we respect it. We get above it, boom. Immediately turns into discount. We respect it, we respect it, we respect it, we respect it. Acceleration. Let's see, at the current stage, you're having more BE and losing trades. I don't know how to keep moving ahead. You're tired. I don't mean to laugh at you, brother. It's funny because I remember that feeling, right? I feel like anyone that's finally made it out of that nonsense or the struggle of profitability has gone through that. But I mean, the fact that you're getting more break-even trades than before in itself is a win, right? So it doesn't feel like it now, but you have to think when you start, it's probably just all losses. So now that you're starting to get more break-even entries, that means you're starting to see things a little bit better. But yeah, I mean, it just takes time. Like the videos themselves are nice to have for the information on what to expect. But in reality, they don't really help you do it in practice like forward, right? They're very good for looking at what should happen on the left side of the chart. But the only way to get truly proficient with understanding what's going to happen in the future when candlesticks haven't even printed is to sit in front of the chart and watch it happen, right? And get used to what takes place. And like Mike's saying, that's going to take, right? That takes a long time. I mean, I say that took me probably, really, if I'm being completely honest, it took me probably 6 years to get to the point that I wanted to be at. And a lot of people don't have the commitment to do that, to grind for that long. Give me 1 sec. Head to the bathroom. Okay. Where we at here? Message is longing ES to 63. Oh no, Hollow. You say it and it goes against you. The Wall. Is that how I'm saying your name? Hopefully. The Wall. The Shay. You've gone through all the videos at least once with notes on most of them. Good. I've done that as well. I've told this story, right? But I've seen all the videos at least twice in their entirety. Maybe not within, we'll say within the last 2 years, maybe not, just because I don't pay attention as much because I don't really need to. But before that, when I'm learning, I've seen every single one of his videos twice, legitimately. Right, but even that didn't really help, like sitting in front of the chart all day and looking at the price action did. Should I focus on journaling and trade reviews and become better? It really is that simple. Because as we say, I think too many people, especially ICT traders, get caught up in the enigma that is Michael himself, right? To where he has so many concepts that seem, I mean, I wouldn't even seem, they are very precise and they work. But because he does it so easily, a lot of the students think that once they learn it, that they should be able to do it with the same ease, when that's just so far from true. Right, because if I was to ask you, like, let's say you were trying to become a doctor, do you think just reading all the books on how to perform surgery and the best surgeries and what you should do in surgery will actually make you a good surgeon? Right, at the end of the day, that's just a roadmap. The only way to get better is to actually do it. So yeah, it's nice to have all the information and watch all the videos, but the only way that you'll actually get better yourself, reading price candle by candle, is to sit in front and do it over and over. Hey, appreciate that, Sam. If I had to guess, I would just say I don't really promote myself much, right? That's kind of why. Not the best marketer. I'm more so, here's how to trade, here's what you can do. If you find it useful, you'll find me and follow me. If not, okay. But who knows, maybe I go on a marketing spree. I don't have the personality. I felt like if I was like Michael or something, I'd have a lot more people, but it's hard for me to be outgoing, or not even outgoing, for me to put myself out there like that. Daily routine. I mean, if I'm being honest, the daily routine wasn't much different from what it is now. I just got better at understanding the setups. Right, I got better at understanding what I'm looking for. But yeah, the routine itself is pretty simple. The night before, I like to look at how we've opened. Or pretty much I like to see what previous day did. I like to have daily highs and lows. As we go into the next day, I like to see what the overnight range did. And then as we go into the opening, I'm pretty much just waiting for, right, if we're going to create a Judas swing, and then I'm going to target my original liquidity point. I would say the thing for me that really took me out of break even and into profitability was just trusting the setups themselves, right? Because I found, like looking back now especially, my biggest issue was once I got into trades, I would be too emotional. So I would manually exit if I saw things that made me nervous. Right, so a lot of times I would close the trade at break even and then it would run to my objective. Or I would close it as it's like going for my stop without taking my stop. But because I was in drawdown, I didn't want to be in drawdown, so I would close the trade manually. Boom, it would then go right back to where I was expecting. Then that kills your P&L, right? Not allowing your winners to win, but letting the losers lose. Yeah, I've never revealed myself. Hey, I'm a shadow, man. That's the alias. I do wear glasses, though. Any celebs you look like. I don't think anyone's ever told me that. I look like any. I'm trying to think. Has anyone ever told me that? Gotta be honest, I don't think I've ever had anyone say I look like somebody. You think we might push back up today? Yeah, I do. Especially, I mean, look at that. Look at the way we cleared those lows. I think that was the objective there. We're holding this first presented. If we can get above this new day opening gap again, I think we should be able to release and at least get into previous day's high. That's kind of what my expectation would be. Was NQ. NQ is a little bit higher as well. So yeah, I would look for a bounce from here. We are underneath the opening range gap, so that could be a pretty strong area of resistance as we're seeing here. Right, we said how this would kind of be the area that holds price. So this fair value gap aligned with the bearish breaker, aligned with opening range gap low. If we can invert that, I think we'll be able to release and start targeting at least a new week opening gap potentially. You did that twice today, got emotional and exited early. Oh, see, come out. It happens. And that's just stuff that you get better with time. Such a cliche thing to say, but especially for trading, like you can't shortcut the experience. There's no way to speed up the process than to just sit there and see it for yourself. You'd like to join mentorship, but I work all day Monday, Wednesday, and Friday mornings. I mean, we could have afternoon sessions. I don't do it as often, but I wouldn't mind doing that if people needed it. Because I mean, honestly, I like Power Hour is my that's my baby. I love me Power Hour. I mean, if you just scroll through my Twitter, you'll see a lot of trades are either the AM session or just that Power Hour because I just like it. So I wouldn't mind doing Power Hour streams. Oh, hi. Please don't what, Mike? What'd I miss? What'd I miss? Oh, please don't have afternoon. Hey, we got to do what's best for everyone. No, I mean, it won't change. If I did that, it'd probably be morning and afternoon streams. Be one in the morning, one in the afternoon. He said, no, please, please, no. Yeah, I'd do that. I would only do that. I mean, I'd still have the morning session too. So you could watch the morning. You'd be asleep for Power Hour, then you wake up, watch the recording. Nice, we did. Did we invert that? Oh, we're trying to. If we can, we should be good. Really, we got to watch the volume imbalance though. We need to get above that. So both of these together. When there's data, that's fair. Honestly, though, Power Hour doesn't really ever have like news. That's kind of why I like it. It's pretty methodical, but it respects, like it could be precise. So it allows precision, but at the same time, like I said, it could be a little methodical, so you can kind of be a grind to sit through, but if you understand how it delivers, it's nice. All of like my best, we'll say Twitter videos have been power hour trades because it allows you to stack. People like seeing stuff like that, right? The stacked entries, the precise stop loss and exits, the swing highs, swing lows. So already you could almost like trust that. I need to see two though for me. Say you're someone that wants to be aggressive though, as we say, low hanging fruit, little 5 handle ends model. Something like that you could try right there. 5 handles gets you into the equal highs. Should be able to reach into that pretty easily. I'd really like to see us get all the way back up here. Let's just hide everything real quick. Let's go clean chart. Boom. Yeah. So we have that. We have that. Hide the indicators. That's a key area. This is going to be a key area. Still want previous day's high as well. And midnight. Don't care for the low. Where'd the midnight level go? Hello? Midnight? There it is. Five-minute inversion. Okay, yeah, we'll see if we can't keep pumping from here. So now once again, we're looking at right midpoint of this inversion. We have created a 1 minute perfectly aligned there. So this would be allowed for price to retrace into if we wanted to. Doesn't mean it has to, but if price comes down into there, we're not worried about it. Closure below would be the only worrisome thing if we're going to try to target buy side. Maybe we hang out till lunch. So consolidating at the high of the inversion, we'd want to see that pretty much displaced higher if we're going to trust the longs. Right, so after running out a short-term high like this, we did run out the short-term highs. We're hitting a volume imbalance. We could see short-term consolidation, but from the consolidation, we would want to see displacement to get above old premiums. Well, like as we tap this level, ideally we would get above that because then we could use it as support. If not, we'll end up holding. And then once again, we're creating that stair-step of delivery. So from this original low, we create a higher low. Let's say that we held from here, created a higher low before hitting that. This tends to lead to low resistance liquidity runs, right? If price wants to resume bearishness. So usually if we're going to have this type of delivery where we're creating a lot of higher lows, you want one of those higher lows to create large displacement so it doesn't make an attempt to come back for the lows and instead creates a new discounts in the form of old premiums that are getting inverted. So like right here, I would not want to see, if our expectation is higher prices, you wouldn't want to see this hold. If anything, it could reject maybe once but then you'd want to see it be traded through. So like it could do something like this, right? Hold, create a swing high. But if it was to revisit the inversion, you'd want to see the next candlesticks try to clear that swing point. Activating this now as a discount that could be used. When I was in break-even days, how did you decide on which model to follow? How did you decide the trade frequency? That's a good question, actually. Let's see. So for me, I would say journaling. Journaling daily helped me figure out which, or at which point in times, right, the best entries for me were taking place. So by, at the end of the day, going back in and journaling up the best moves, I was able to build pretty much a database of, right, the highest probable setups, we'll say. So the longer I did that, the more my eye got used to seeing those setups, which then made it easier for me to partake, right? Because not only did it make it easier to spot good setups, it also made it easier to spot setups that I used to take that weren't as probable. So yeah, I hate to go back to it, but really, right, the journaling is what allowed me to escape the break-even trader stage. Because before that, like getting to break-even, I really hardly ever journaled. And I more so did kind of what you guys are explaining. I just watched all the videos. I would then go in and just try to trade by doing that. And eventually I started getting better, but I was never able to reach, right, that consistency until the journal. I will always be an advocate for journaling. As far as trade frequency, I never really have trade frequency. I have like a hard stop loss on max loss percentage. Like if I have, right, a 2% max stop loss for the day, then anytime I get to that, I'm just going to stop regardless. It could be one trade if I thought it was good. It could be 2 trades at 1%. It could be 4 trades at 0.5%. So the trades themselves, I'm not really too worried about. It's more so the percentage, won or lost. If I find myself getting to 2% down, then yeah, we call it. Oh, are you leaving? All right. Have a good one. 30 minutes, you said? Okay. Sounds good. See you soon. Well, maybe I just hang out. We'll probably just hang out here until my girl gets back from her run then. That's what we'll do. And then we'll go to the gym. Should take us into lunch. So as we said, that is going to hold. If we were to create that low, yeah. So we pretty much would need to see this hold. If anything, this fair value gap and then displacement through this high. If not, like if we close below this, we'll just come down for these lows again, more than likely. ES long about to hit target. Hey, say less. I'd like to see midnight. As I said, that we need to hold here. So we need to hold, right, because we've created pretty much exactly what we said. Higher low, higher low, higher low, delivery into previous day high and the original bearish that holds us. 3 drives could easily be swept through now. So if we're going to trust this, we need to only pick up this short-term low, hold the inefficiency, and make a run. If we close below, we'll probably close below, use that as resistance, and make a pass for these equal lows to return into the first percentage down here. Because now we're leaving the opening range, right? I don't like to see that. If we were going to be bullish, we would not have wanted to close back below the opening range like we did, because now that level in itself can act as resistance. So we need to pretty much get back inside that and reclaim this bullish fair value gap right here. We'll see. We'll see. This will become an order block if we get above it. 3 consecutive down close candles paired to the original premium. This would become a high probability entry. All right, if price can displace above that to then target the buy side up here somewhere. We have a liquidity void, so I think this will be our flip point right here. Price will probably try to price into that, and then it's a matter of whether or not it goes bearish or it closes above and maintains bullishness. Closure above, we should be able to run. Look at the way it's holding that inefficiency though. It might just hold that and go bearish. Like if we were to close below midpoint again, I would almost expect it to just run bearish from there. Perfect delivery at the inefficiency high, which is also midpoint. Closure below. This would need to get right back above. Look at the, let's see. Okay, so we get a wick above it. Can we actually escape it? Nope. Bodies tell the story. Wicks are nothing but jokes. If we hold that back to back, yeah, I think we'll come to this low. Because really this wick should hold. So yeah, if we hold that again, so yeah, I would expect to fall through. Unless this becomes protected, but I don't think this becomes a protected low. It probably gets cleared like we just saw, and then we'd have to reject from here. So this is where it gets sketched, right? Because this, if this low holds, this will be the true kind of stair-step higher lows that we're talking about. And we really go all the way here, like this. So now, right, if we were to run this high and hold from this, that's going to be 3 drives. That could easily be cleared again. So we're not out of the woods yet. Really still, this liquidity void here is going to be important. True void in price, right? Different from a volume imbalance, we often say, because there's no trading that gets placed between here. Normally with a volume imbalance like this here, when we close, you'll see the previous candle at least wick into that candle before moving away. Instead, we open all one-sided, no price delivery, true void in price there. Those will often get retraded too, even if we're going to run bearish. Right, those are pretty strong magnet. That's why I would kind of expect like this holds for the short term. It hits that and then it would fall. Ideally, or we'll say opposingly, if we want to see higher prices, we'd want to see price try to close above that and then use it as an area of support to hold bodies for a higher run. But for the time being, just consolidating within this little fair value gap. We'd want to see the body hold that at this point if we're going to reclaim it and get above it after hitting the low. So we're watching the body trades back inside. So yeah, we're just getting ugly, which means we're going to come back down for these lows again, more than likely. Because we're holding the bearish inefficiency. We didn't get into the volume imbalance, so I would expect at least one more stab up into that before we were to fall, if that's the case. Honestly, I want to see higher buy. I still want to see buy side. I want to see that up there. So midpoint should hold as we see here, right? It should hit that, it should wick, it should close back above. Once we hit this, then we'll see what happens. You guys have crowns next to your name. Did I do that? Did you guys do that? Why does that happen? I've never seen that in the YouTube chat before. Swing high, not good. We need to displace above that. If we wick that and hold this, so like, let's say that we run this high, we hit the volume imbalance, but it's only a wick, and the body remains inside of this candlestick's high, then I would expect a pretty quick sell-off from there. Okay. The participation award, let's go. I like that. That's funny. Cool, good to know. I was wondering what that was. I was like, what is that? So yeah, this will be interesting here. As I said, if we wick the high, if we hold the volume imbalance, we'll look for the equal lows to be targeted immediately following that. If we can displace above the high, get above the volume imbalance, we'll look for previous day high and then midnight. That might be hard. Hollow Mike's been around forever. I don't know if it goes off like cumulative comments over the lifespan of YouTube, because if that's the case, it'll be hard to beat Mike. If it resets like every month or so, then you could probably get him. So we're back at the daily open right now. Daily open is another key level, okay? Here. Wait, what happened? Hello? There it is. Bruh. Let me move the chart. Right here. I don't know why it won't let me zoom in. What the? Whatever. But daily open, that's going to be key level. All right, so his will be important, as we said. If we end up holding this, because notice how this candlestick closes on the range high. So it's making an attempt to come out. If we get above that, close above, we should keep running. If we hold this, this candlestick closes back inside this range, we would look for the equal lows to be targeted next. So for us, because we want to see higher prices, right, we want to see buy side, or at least some higher delivery, we want to close above this. We want to use it as an area of support to get us into previous day high. We then want to get above previous day high and ideally getting above this fair value gap that sent us lower. That'll then create a higher time frame breaker. Low, high, lowest low. I do that every time. Low, high, lowest low. If we can break that, of course, right? Right now, we're just still inside of it. But let's say we were able to get above that. Then that breaker becomes paired with the inefficiency, and that should hold. So from here now, as we said, if we're going to close above this, this needs to hold us. We should see price respect this as an area of support to push us into previous day's high, running out of these short-term buy-side highs. In theory, we still could hold from here. So we're not going to be out of the woods until we get above this fair value gap. This becomes like that true flip point for us. Right, previous day high, buy-side, 1 minute inefficiency, all in this one area. That's probably close to the core to level 2 of that new week opening, or the opening range. Like, let's see. Take the anatomy of it. High to low. Hide that. Yeah, I mean, right, like the quarter level right there, near it. So if we can get above all that, yeah, so we would, perfect actually. Closure above us, closure above the high gets us above the lower quadrant of the opening range, which then should support price as well. So yeah, I like that as our flip point there. Let's see what we get. Need to get above it though. Midnight, that worked. Look how that fair value gap got created perfectly there between the old high and the volume imbalance. So now this becomes kind of the area I would want to see price hold. If it was going to wick into that, we could trade into it. But I wouldn't want to see the body start giving away, because now, as we said, if this ends up holding us still, we could make a pass for these lows. We need to get above the 1 minute here. Let's see on the 5 minute sense. We hold the 5 minute fair value gap. Yeah, that's just ugly. We have a new 15 minute candlestick here now. So that could be nice. We're holding the inversion volume imbalance on the 15 minute. So that's 15 minute. On a 1 minute, it's here. So we'd want all these areas pretty much to support price. $63.16. I like that. Yep. Right for this high. That'd be good. I'm gonna try to gravitate into midnight, run out the liquidity. Previous day's high might be an issue, but we'll see what happens there. If we can even get up there. Still hold. Oh, damn, you took number one just like that. See, you already took it. That's crazy. Hey, what's up, baby girl? Come here. Yeah, let's get into midnight at least. So that right there, okay, that's going to be where we get sketchy. So did we clear this high as well? Ooh, we didn't. All right, so not quite yet. If we run this high though, and we still stay in this range, then we're going to be a little worried. We need to see us get above that, and then we'll look to take one off at midnight. Maybe one midnight, one here, one here, one here. Beautiful. Exactly what we want to see there. So as we said, right, as soon as we get above that, that becomes support. Perfect delivery. Open with a bullish volume imbalance. Perfect delivery into its low. Displacement above. Equal high should hold. We should get release. If we get above fair value gap, we should continue to release. Nice. Bearish volume imbalance. So I would want to see pretty much this candle run into this candle's high and then try to close bullish. So that's fine, right? I wouldn't want to see much lower than that. Like if we come all the way back down into the low of the fair value gap, that's just going to be gross delivery. Especially if that wick, or if we don't have any wick to the upside. If we have some wick to the upside, then we could see like a deeper retracement. That's fine. But I would not want to see a no wick candle to the upside that closes below midpoint. If anything, I'd want to hold midpoint, maintain bullishness, close above the fair value gap again. If anything, close bullish, so we're kind of negating the bearish volume imbalance here. It'll still be a hidden volume imbalance, but negating bearish volume imbalances is a bullish signature. So that'd be good for us to see continued bullish delivery. As we said, we've come into this candle's high now. Wouldn't want to see much lower than the midpoint. We'll see how we close. Candle bodies. We close inside. Okay, so yeah, not really a fan of that. There we go, Mike. Yes, sir. Promote it. Yeah, join the Discord, Hollow. Only kidding, of course. Only if you want to. We would need to hold from that fair value gap right there. Nice, so that's fine. It's all about the candle bodies, okay? The wicks, we don't really like... That's why you can't get too shaken out by the candles themselves. And that's one thing that I've learned. Or as I said, when I would see candle bodies doing this, I would get nervous. I would manually close, and then it would wick, and I'd be all pissed. So you really have to let the candles play out, right? The candle closures tell us everything. The wicks are just that. The wicks do the damage. But even then, like, come on. It's hard to argue algorithmic signatures when we see things like this. Perfect delivery. Perfect delivery. Perfect delivery. Perfect delivery. Even here, perfect delivery. We're getting little 3 drives in here, though. I don't like that, really. 1, 2, third drive within this leg, so we may need to pick up the short-term low. Closure below this, then we'll have to worry. If we can hold that with the body, okay, we'll see what happens there. Closing below midpoint will lead to another one lower at least, so I'm looking for at least these lows to be picked up. Does have volume imbalance. That's the last line of defense. Underneath that, closure below that, we come all the way back down probably. And we didn't get that high. Hopefully we got exited on that holo. It hit that level perfectly. It's all right. We still have a chance though. As we said, we can come back down. This is another thing that we teach. When we clear short-term highs like this, so from this leg low to high, right, that's our current leg, that clears a short-term high. If we still expect the full bullishness to continue, we could see deeper retracements into the original entry zones, and price can still try to hold that and run from there. So I'm pretty much watching to see if the volume imbalance stays respected, because if we can hold that while picking up the short-term low and then displace higher again, we should get the release into midnight. So that becomes this, like this here. So from here, yeah, we'll watch and see what happens. We would not want to see candles close below this. We have a lower volume imbalance, so it may need to wick that. But ideally, as we're saying, I wouldn't want to see candles start closing below this, because then it's going to be a new area of resistance that will probably send us into equal lows after creating 3 drives higher. Because right, on a 1 minute we closed above, but 2 minute, 5 minute, everything else held that fair value gap. Closure below, so yeah, we'll expect this 1 minute again. Bearish volume imbalance as well, so if, let's say that this ends up holding, if we immediately rebalance, so if we reject from here and leave this open, that means we'll probably close inside this fair value gap. If all that takes place, we'll aim for lows next. Yep, so far immediately rebalance to this candle's close. Perfect delivery into the volume imbalance. If this stays open, leaving the bearish volume imbalance, we'll look for the run on the equal lows. I mean, we close it in, but not really enough for me to count. So we could still hold that and break lower. Yeah. Once again, though, right? Perfect delivery. Look at that. Liquidity void. This is a bearish breaker in here. High, low, higher, high. So bearish breaker aligned with the liquidity void. That's why I think these equal lows are going to be the target. We're at the daily open. Daily open would need to hold if we're going to try to protect these lows. But yeah, just as we said, right, we're creating that ugly kind of the stair stepper. This is where retail people have success because they're just blindly following this, right? Like we understand it's not, the lines aren't doing anything. So what, they'll see this and call it a channel that holds or whatever. When like we understand it's not the lines, it's the actual PD arrays that it's referencing. Cleared the lows. We'll see if we hold this range. If we clear those lows and hold this range, we may give it another opportunity to try to get back up there. If we were to close back above this 1 minute now, reclaiming a bullish, then we would look for a short-term run back into the volume imbalance and potentially this higher fair value gap now. And potentially look for like the seek and destroy delivery. So coming off of the higher time frame low, the first presented. There's actually no wick on that candle either. Now that I think about it, we may want to come back down for that. If we leave this opening range, I would actually look for these lows. I didn't realize that this candle has no wick. So from when we opened, it's been all one-sided, which is good for bullish delivery, but we need to actually start running. We'll see if we leave that little volume imbalance open there. If we do, we could probably use that. About to head into the lunch hour. We'll see if lunch can't pick up some of the opposing liquidity. We may just get choppy here though, heading into lunch like this. Looking at this 2-minute volume imbalance here. Retested the liquidity void. Once again, perfect delivery. Right, algorithmic signatures that we like to see. We need to get above that though if we're going to start running. If we were to reject that, clear this low, clear the volume imbalance, probably look for this low again. But I'd like to see lunch try to clear some of this buy side now. Because in reality, we've only cleared this. And that's not even really the bearish leg. Like the true bearish leg from this high to this low, if that's the original leg, we haven't cleared any of the buy side, right? We created equal highs here. So we should be able to get at least that. But instead, look at how price holds there. So perfect delivery, holds, body gets nowhere near it. Body's hovering away like that usually means that it doesn't want to close above that. So we'll see if the body can't get near it, but especially closing away and then next candle, no wick to the upside, right? That's bearish. Price showing that it's unwilling to try to get above that area, does not want to even retest it. We'll see if we come back down all the way into that fair value gap or not. We close back inside this range. We'll probably look for the low one more time. $12 now, so we'll see what lunch has to offer. As I said, we'll hang out until my girlfriend comes back and we'll skedaddle. We need to hold midpoint here. We need to see a quick rejection higher. If we did do that as well, right, so we would need to close above the 1 minute, we would need to close above the volume imbalance. Because we may try to use the high of this fair value gap now as resistance. Because we got below this volume imbalance here. So we created the bullish volume imbalance. We respected it the first time. Oh. We respect it here perfectly. We then close below it. That would become resistance. So we would need to get back above that. Right, and you see, I mean, perfect delivery and rejection there. So if we saw something like that, closure below midpoint, this low gets taken out. No problem, Scotty. Yeah, we're about to wrap it up too. I heard her just walk in. That's one of those buy sides. I just want that high. But we probably won't get it. Let's watch here. Let's watch. Let's see what this does. Can we leave this open? Leave the volume balance open. Start running bullish. Or as we said, we don't want to reject that like that. That's pretty ugly. If we could leave this as a bullish liquidity void, that'd be nice actually. So we just open inside the volume balance, run bullish, get above here. Oh. Yeah, this would be nice, especially if we can close above. If this candle can get above the volume imbalance. If not, we'll probably just immediately come back into this liquidity void. So we can't. I would expect a retracement back into the fair value gap then. So probably an immediate rebalance, full retest of the volume imbalance here, and then the closure above. Yep, right back down into it. So at this point, we would need to move aggressively. If we just stay here, we're just going to consolidate and lunge. But pretty much this candle, we need to reject, get above, or the next candle, if this candle holds, would need to open and get above that volume imbalance. Especially after holding like that. Bullish volume imbalance. So yeah, especially right, bullish volume imbalance, we'd want to see this push right through this volume imbalance here. We're getting stuck right here. 5 minute. Right, so this is what's currently holding. So we have a 5 minute bearish fair value gap like this. Cannot get above its midpoint at all. So once again, premiums are holding. We don't like seeing that. We need to get above that. Oof. Close right on that level again. Yeah. Immediate rejection. So right, just that give and take. Sloppy delivery. Yeah, could not get above that. If we close below this, that'll be a bad sign, especially after holding from there. Liquidity void gives way. Yep. So closure below, we'll look for the low. This would have to turn into a no wick on the bottom candle. We're going to create the wick. So we pretty much would need to hold this, or we're going to clear this low right here. Right, getting stuck, as we said, at the 5 minute. Does not want to let price get above that at all. Holding its midpoint. So now we look for the rejection lower to clear out the short-term low. Unless the 1 minute can hold somehow. Boom, there's the low. Okay, we'll call it there. At this point, we're just getting range bound, so. Yeah, nothing else for us to really do. Let's clear it all up. So overall bearish, for the most part. Right, we wanted to see this high. Instead, we only hold this high. Then from 9:30, we get a quick run up, but from there, that becomes the high of the morning. And all bearish delivery. We're not holding the premiums. Breaking lower, holding the order block. Once we get below the hourly with the fair value gap that holds, delivers us into the relative equal lows. And now at this point, we're just kind of consolidating right near previous day's high. Since we close below, like if this gets left open, I would actually look for these lows again to be targeted. And we'll just maintain the bearishness. Nice. But yeah, overall, not a bad day. A little choppy, but 2 for 2, had some good reads. And we were to execute nicely. I'm trying to see as far as what we can expect going forward, higher time frame. If we can close, I still held that same idea. If we somehow can get below this level, close below that, I like this weekly high once again, and we'll just stay range bound on a higher time frame. Right, we'll just stay in this choppiness here, especially because CPI couldn't really break outside of it at all. I would expect that retracement into the weekly high here. And that weekly high, right, is this level. It's the old daily high, the old all-time high. So very key area. Price clears the buy side. We'll look for a retracement into the weekly. Yeah, I like that. Okay. So I hope you guys found that helpful today. The free YouTube stream for this week. We'll be back on Discord tomorrow and Thursday. So if you guys would like to join that and see actual live entries and exits as well, you can check the link that is in the YouTube. If not, we will see you guys next week for the next free live stream. Yeah, until then, stay safe, everybody. For those in the Discord group, we will talk again tomorrow morning. Let me just check high impact news real quick. PPI 6:30. Okay, so tomorrow will just be a normal stream. We'll meet up 9:25 Eastern, and we'll see what it has to offer. Yeah, until then, have a great rest of the day, everybody. Stay safe, and we'll talk whenever we talk next. See you guys.